Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of XRP, taking a look at what's been going on with that price action and where I think things are heading next. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe. By tapping the bell and selecting all the notifications, you will not miss another XRP update. Let's get right down into this one, right? So we're going to be taking a look at the daily time frame. This is something that can take several weeks to play out on this particular time frame, so do bear in mind you don't expect instantaneous results. It can take a little while. We're going to be taking a look at Elliott wave theory and smart money concepts. We'll start here with smart money concepts. We're paired up with USDT and we're on Binance as our data source. As you can kind of see, there's one fair value gap here on the daily. This one's actually pretty reasonable. It's not too bad. It's basically 39 cent to 40.6 cent. So again, it's not too bad. We can see that this is just short of the equilibrium area as well, which is basically 50% level on your fibs. And so it's looking pretty good. Now, we still have a weak high and a strong low. This is to basically symbol the idea that we have moved quite away from this low at the moment. So for now, it remains strong, not likely to be tested, but I imagine that we will start to see some kind of price action and moving downwards, and we may find that this strong low becomes a weak low over time. And the same with the weak high. At the moment, we've only tested this area once, as you can kind of see here, makes it quite weak, and we're above that equilibrium. Chances are that we might test that again, right? That's kind of what smart money concepts here is telling us. Now, what we do see is that the fair value gaps that were left behind, all except for this one here, have been filled. Chances are that we do have to kind of move back down here. We can see that there is this idea of smart money coming in, moving the market up. Obviously, price pushing up this way means that price cools back down because they don't want to keep paying premium prices. They want liquidity to come back down into the lower areas. Now, I did put a course together on smart money concepts and Elliott wave theory in the Cheeky School, so check that out, linked in the description below if that's of interest to you. Now, here we can see that we are in a bullish structure, and we've got a couple of breaks to this. So for example, we see the change of character from bearish to bullish. That's over here. We move up, okay, with that continuation. Now we do have this retracement here. This is not an unusual thing to see. When you see a change of character like this, you kind of have to kind of expect, not always, but you kind of expect a cooling off period to occur, natural kind of progression to the downside here. Then of course we start to see things moving back up and we get a break of structure. This break of structure is a confirmation of the change of character over this side. We see another one here. Basically, this is what I would call a CTS. It's a confirmation of the trend, so continuation trend. So we can see that here, there, right? We can see change of character, break of structure, break of structure. So we remain bullish here at the moment until otherwise shown within that structure. So our structure is bullish. But I do think we have to acknowledge what Elliott wave theory tells us as well, and that does actually show us now with a potential reversal. So we want to be a little bit aware of what's going on there. Now, our daily stochastic RSI still has room to the upside and is about mid-level. It can come down, it can go up. It's not going to help us understanding where that momentum is shifting. I think ultimately XRP had the potential to continue pushing upwards, but if Bitcoin decides to bring the rest of the market down, then I do expect XRP to follow. I am not expecting an alt season. I know a lot of retail investors are expecting money to flow out of Bitcoin into alts to kind of get an altcoin season running, but unfortunately I do not see that as something that is going to unfold. Instead, I think the entire market will fall down with Bitcoin, and I do think Bitcoin is gearing up for a bit of a move to the downside, but that's a macro view, and I don't think that's going to happen within the next week or so. I think that's going to take a little bit of time to see unfold. We're starting to see some progression, but I don't think that's going to be a continuation to the downside straight away. We'll see how that kind of plays out. But back into the room for XRP and smart money concepts, we can see that not only is equilibrium right here, this basically is 43.56 to 44.93 approximately. It's also sat right here on an internal buy order block. There's also a stack of buy order blocks all the way down here as well. This is basically telling us there's a lot of buying potential in the market, a lot of liquidity in the market, and it happens to sit down here a little bit lower in the price chart. So if we were to think about where the liquidity is, well, there needs to be a catalyst to get us there. But ultimately, it looks like this is where the buyers are, the majority of them anyway. You can see this green area where there's a lot of overlap. That's generally going to be the area. This basically looks like, to me, we can probably much say 34 cent or 34.7 to 39.6. That's going to be approximately the big area where we're likely to find good support on this previous consolidation phase. Now, what is going on up here? We're going to jump down into the Elliott wave theory side of things, because that's going to help us understand what is going on. So if we take a look at this on our weekly time frame, we can see that we have completed a structure. Now, it is possible that we just go up a fraction more, more specifically kind of topping out towards that kind of 68-cent range. It's possible. Is it probable? I'm not so sure. Now, what we can do is we can acknowledge that the previous area over here on the weekly chart that was previously demand has turned into an area of supply, as in we're getting rejected from this area. It's not the first time that we've done this either. Now, if I bring this down into our daily and just shoot this out a little bit and bring this up, right? So we know that that's an area there that we want to kind of be thinking about and focusing on. The other thing that I want to kind of talk about here, before we get into Elliott wave theory, is that we do have ourselves a higher high situation right in here. And if I go ahead and actually drag this over this side, I think we can end up with a almost neat higher high, higher low situation going on. Now, it's not tilted massively, but it is an idea that actually something big is at foot here. Okay, and we need to kind of acknowledge that a little bit. So higher lows and higher highs. These have a tendency to break on down. Now, we can show you a few of these smaller ones where you can see this time and time again. We throw one in over here, bring that in, bring this down, higher highs, higher lows, and we break to the downside. And the opposite is true as well. Okay, so if I come in here and I see lower lows and lower highs, then we had a tendency to break to the upside. Okay, and what you find is these particular patterns, you can draw them in so many different places. If you're looking at bullish structures, then you're going to be looking for these lower highs and lower lows, like this one right over here, okay, because these are the ones that are going to get you those breaks to the upside. And you can see these, no matter what kind of cryptocurrency you're on, stocks or Forex, time and time again. I mean, this one actually, you'd ignore that outlier over there, you can see was a real nice, neat example. Now, you can't time it necessarily. You do look for like 3 touch points on the bottom, 3 touch points on the top, that kind of thing. But you can kind of illustrate this by going back through time and understanding where we are. Now, this one's not perfect by any stretch of the imagination because it's a big macro view, but it is tilting upwards ever so slightly. There's a higher high and a higher low. 2 touch points on the bottom, 2 touch points at the top. And so we have to consider a couple of things here. This particular idea is that it's going to mean going down significantly lower. Alternatively, this is a bit too broad, and actually we might need to narrow this down a little bit. But it's worth noting that there's something going on here in terms of higher highs and higher lows. Now, I talk about that because as I come into here, we can see a bit of a bearish setup as well. And it's right in here on our daily time frame. We have higher highs and you bet it, higher lows. And we can see it right in here as well. I might just have to expand that out a fraction. You can see that this one wasn't perfect, but these two are, along with those two at the bottom there. Okay, so again, from an Elliott wave theory point of view, this is actually really easy and neat to kind of explain because it is just a 3-wave drop and it looks like this. And you're probably going to be testing out that 50 to 200 EMA range. We can actually go ahead and use the fib tool to actually predict out where that is likely to go. Okay, so we measure that distance from the bottom of that A wave to the origin point of that A wave. We move the fib over to the top of our B wave, and we can then draw in, and you will be surprised, guys, that this happens to fall right in here, just above that 200 EMA. Okay, so we're talking about going to the 1 to the 1.236 fib level. So we're talking 42.89 cent to 44.92 cent. That is under a 3-wave count. However, if we were to come down to a low, slightly down here, apologies guys, 39.8. 39.8 is a trigger point to convert that into a 5-wave count. I don't know if we've got that kind of measurement in the wave 1 or the wave A wave here, but it's worth noting about these things nonetheless. So ultimately, looking at this structure on our daily chart, it looks like we have higher highs, higher lows, which do have a tendency to have a breakdown, okay, and we can see it as a three-wave drop heading us or taking us down towards 42.89 to 44.92. So Elliott wave theory tells us a move to the downside, and it gives us a bit of a targeted range. We come back to our smart money concepts, and we want to note out where our equilibrium is. Equilibrium here is at 43.6 to 44.97. We come over here, 42.89, 44.92. That is a very interesting coincidence that this happens to fall in line with the expectations of what Elliott wave theory has here. So ultimately, I'm thinking a revisit to equilibrium just above that 200 EMA would be a pretty natural, healthy correction for XRP. So a move to the downside might take 1 week, 2 weeks, 3 weeks to happen. I don't know, but we're going to keep an eye on that and see how that unfolds. But for now, I think that's a pretty healthy way to be looking at XRP. Let me know what your thoughts are down in the comments below, and I'm going to wrap this video up right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description below. Until the next one, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.